What does Tesla have to do to impress the Wall Street? I really don't know at this point. They had amazing numbers, Q2 numbers that they released yesterday, beating their own goals and records. And the response from the Wall Street is like, eh. Now, I'm going to go over a few different quotes that I've seen out there from Wall Street analysts. And, some of them are actually reasonable. And I think I'm also going to frame this video in terms of just general health of Tesla rather than investment. I don't do stock market. I just, and I definitely don't want to give any type of financial advice here or investment advice. But I do want to kind of go over what Wall Street analysts are saying and see where they are correct in some ways and where it's a complete and entire, BS. So let's do that right now. Taking over the world, electrifying the world, E4 Electric! Welcome to E4 Electric, your number one source of unbiased electric car news. Go ahead and click on the subscribe button, and now let me give a quick shout out to one of my newer Patreons, Ken Epstein. Thank you so much for joining my Patreon community. The only place where you can get, you can watch me live. And of course, thank you to all of my Patreons for supporting this independent channel. All right. So as we know, the numbers are amazing. Tesla beat its own projections and goals in deliveries and in cars made. And a lot of people were surprised, including myself. I really didn't think that they were able to sort of beat their Q4 numbers because there were, really, really off the charts. They also, there was a biggest drop off in the tax credit here in the United States. So I'm definitely one of those people who are surprised, but I was also one of those people surprised by the reaction of the stock market. I mean, we're talking about less than 5% up. I just don't quite understand because this company, makes their money by selling cars, and they sold a lot of cars. So, all right. So let's just kind of step back. And again, I don't care about the stock price as much as I care, where is this coming from? Why are the investors are not really into it? So let's go over a few quotes that the analysts send out there as far as guidance for Tesla. And we'll start with the one from Goldman Sachs. It says, we believe 2019 second quarter deliveries and order flow was helped by the company's release of its standard Model 3 variant, a leasing option, and a right-hand drive Model 3s. Okay, so I absolutely agree with the fact that obviously as they released a cheaper version of Model 3, a lot of people jumped on it, and a lot of these deliveries are most likely, a big part of these deliveries are those cars, and obviously, these guys are not in business of making deliveries or counting deliveries. They're in business of counting money. And obviously the lower priced Model 3s have a smaller profit margin, which is, by the way, is amazing that they have a profit margin at all, where all of the other manufacturers are struggling to make money on any electric cars that they're making. But so I would give them that. But at the same time, the leasing option, well, isn't that, I mean, aren't you giving advice long term? And the leasing option just doesn't give you as much money up front, but you still get that money over the time period. So overall, if you're advising on overall health of the company, that money is going to come over the period of time. So I don't quite understand that point. In the right-hand drive Model 3s, I mean, they're just starting to sell them. They just really started. And I don't really see how that's like sort of almost negative drawback. Yes, they've expanded to other countries, and now they've expanded the options. This is essentially an option that makes it available in a few countries. It's not a temporary thing. They will continue selling more of these right-hand drive Model 3s. So I don't quite understand the argument that, well, this helped, obviously, so we can't be happy for this. Whatever helped, right? This was part of the plan all along anyway. So I don't quite understand it. Again, agreed about the Model 3 being cheaper and lower margins, and overall, Wall Street kind of looking at this as, hey, we're gonna count money, and we don't really know if this is going to bring in as much money as it once did with a higher priced Model 3. And they have a point there. All right, let's go to the next quote. Before that, a quick reminder that this video and this channel is sponsored by Byton. check out a brand new Ambite, the all-electric SUV, coming to the United States and Europe at the end of the next year. So it's a great time to make your reservation, especially because it takes $0 in about, I don't know, 60 seconds of your time. There's a link in the description of this video. So join myself and over 50,000 people who've done so. I don't know why you wouldn't. And by the way, it starts with $45,000 before the incentives. Okay, so let's get to the next quote. This one's from UBS. Price reductions, the wider availability of cheaper versions of the Model 3, and a phase out of the US EV tax credit helped Q2 deliveries. Now, this is actually not an unreasonable statement, except for what price reductions? I actually, if anything, I think Tesla actually raised the price on some of the Model 3. So I don't understand where that's coming from. I know there's some analysts are saying that they were really trying to push these cars and were giving people discounts, but I have not heard of a single person, and I run a 30,000 member Tesla owner group, that anybody got a discount. So I don't understand where that's coming from. That is just not true. Again, wider availability of cheaper versions, I'll give you that in terms of, yes, they are making less money. So that one, I would say reasonable, except for that first thing, that's not. Let's move on to JP Morgan. It says Q2, second quarter, like fourth quarter of last year, a pre-buy quarter in the US ahead of another step down in availability of federal tax credits on July 1st. Now, again, I do agree that maybe a lot of people, not a lot, but some people were motivated by the fact that they wouldn't be getting as much of a discount or tax credit here in the United States. But don't forget that argument doesn't really work very well, because a lot of these cars were sold in Europe and China, and there is no tax credit there that's being phased out. Also, I really don't like how they said another step down. It is not another step down. The first one cut the tax credit by almost $4,000. This one cut it in half again, which was only by about less than $2,000. That's not another one. This one's different. This one's actually twice as good, if you will. It's a half as bad. So I don't like when they say like, well, this is just another phase out. So this one's different, and I really resent that kind of, especially from JP Morgan. They're supposed to work with numbers, and this is just not the same as the other one. But yes, I do think that some just the US deliveries were taken, some orders were put in place because of that. Let's move on to the Morgan Stanley. Based on reported deliveries year to date, if Tesla were to deliver 95,000 units in Q3 and Q4, that would put them at approximately 350,000 units for 2019, just shy of their full year guidance of 360,000 to 400,000 units. Now, here's actually not a bad argument, because overall, this is looking out for the overall health of the company, and whether or not they're able to achieve their own goals, which we know is 360 to 400. And they're saying, listen, if they even stick with this record number deliveries, that will still be a little bit under, right? They will continuously have to beat their own records, which is possible, I think, to meet their own goal, just to meet the goal. So this is where I understand, and I think this is not a bad point. From Bernstein, Tesla stated that it will no longer report vehicles in transit. We worry that it will be more difficult for investors to monitor true underlying demand in a given quarter. Okay, so I didn't know that actually Tesla is going to stop doing that. No, I'm not really sure how it is a big concern. You're analyzing the quarter, the previous quarter, how many leftover deliveries that are basically just going to affect the first couple of weeks of deliveries of the next quarter, how many cars are in transit. It's a moot point, at least a very moot point. Now, I don't know why Tesla couldn't have kept it going. Maybe it's just a bad idea, because, if this is going to, worry some of the investors, then why not leave it? But at the same time, I don't understand how it's making that big of a difference. They're going to have some leftovers every quarter, and you're just going to have to know that, because you're a big boy who are doing a analysis of the stock market and analyzing a company. So not really quite sure why this is, so I'm calling this BS, is basically what I'm saying. All right, let's talk about the Bank of America. As a reminder, Tesla continues to forecast losses in second quarter, although improved from first quarter of this year levels, with a return to profitability in third quarter of this year. Now, this is another good point, because essentially this all comes down to profits. They won't won't report it until August 7th. That's about a little over a month from now. And that's where this conversation can actually go somewhere, where they're profitable, are they not profitable? Now, at the same time, we can do math, and we understand when they deliver more cars, almost double of what they delivered in the first quarter, the income is going to follow. So whether or not they're going to profit or still post a little loss, it is still a huge improvement from Q1. You can essentially say the company had recovered from the dip. Doesn't that count for something? And yes, I wouldn't be surprised if they take a bit of a loss, because if they knew they were making some money, I think Elon Musk would be already waving a big Tesla flag and saying, hey, we might do this. But even if I almost don't care if they are minus 100 million or plus 100 million in terms of where they're going to be. I would say they're going to be pretty close to breaking even, and I think that's great news. And definitely, as far as looking forward, the ability to recover, obviously the demand is there, even though people were saying it is not. At least for this quarter, that is something that I think they should take into account, but they don't. And this is what kind of drives me crazy. They just don't take into account all the positives and just take any negative they can. And now listen, I don't mind if they would be proven wrong. It's gonna only take another month to be proven wrong or set straight, right? Or another quarter, whatever. So all of these statements, all of these predictions, they're only going to be short-lived. I just don't quite understand how stock market operates. And again, there are some concerns, obviously, and especially because Tesla is being sold all over the world now, and this is kind of a max, right? All of the models are out, all of the versions of all of the models are out, and all of the countries are going to be selling it at are pretty much on the table. So, is this the company's max? Now, I haven't seen this argument, which I think is actually a pretty decent argument. Is this the maximum the company can do? Because if it is, let's see if they're making money or losing money, right? My concern would be that even they are profitable, they're probably a little bit of profitable. And if they sustain this type of output of, let's say, 100,000 deliveries per quarter, I don't really see how they can raise that in terms of expanding or creating any other options or lowering the prices or creating cheaper models, right? This is all going to be about the demand, which I think should still be healthy. I think the more people see these cars out there, the more friends and families of those people are driving them, the more they're attracted to these cars. There will be used cars, especially Model 3s on the market, so people with less of an income will be able to be introduced to these cars as well. So all of this is positive news, but obviously there are some concerns. Let's see if they can maintain it. Let's see what the profit margins are on this. I will assume continue to improve. Don't forget the Model 3 in China is going to be made in China, which will become cheaper, which means they'll be able to sell more of them. So, lots of these questions and answers, but overall this is good news, and that's why I just don't understand why such a mild reply. I mean, sometimes the stock goes up and down by 4 or 5% a day, just depending on the day. So this I would call this a non-reaction almost from a stock market. Let's see if they kind of find their brains in the next week or two. And sometimes there's good news, and everyone's like, "Oh, is this Tesla good news? I don't know if I want to believe this." And then over the next couple of weeks, the stock slowly goes up as people go like, "Okay, I think we should believe this. Yeah, let's buy it," right? So again, not giving any advice or really doing any kind of analysis. I'm going to leave it to other people. But let me know what you think. Do you think overall this is a great news, okay news, or still underperforming of what your expectations are or what the expectations should be of Tesla, granted where they're at in their history? While you're doing that, don't forget to get on our VIP list. We do a bonus story every Saturday. That's a second thing that you can find that's free in the description of this video, e4electric.com/VIP. Of course, I already thank my Patreon Ken, but don't forget to join my Patreon community. I really, really appreciate it. Other than that, I'm just looking forward to your comments, especially if you are an investor in Tesla. Other than that, see you next time, and remember to stay charged.